All right, morning everyone. How's everybody doing? All right, great. So I take it that you can hear me quite clearly. Just want to test the sound before we start. Okay. How's the sound level? Is it okay? Okay, great. Looks like sounds good. Okay, let's get into this week's market talk. My name is Ryan. I'm the market strategist at IG. We're going through some of the macro events on the calendar for this week and look at some possible trade ideas you can kind of study based on what's been happening in the economy and in the markets. So later on in the second half of this session, we'll have my colleague Nabil Mata. He will go through some of the more technical perspective, some of the charts and price action for this week. So before we get into the details, just a quick disclaimer. What we'll be going through today is just for educational purposes and no specific recommendations for any individual in particular. So these are just for information and for you to just learn more about what's happening. This does not take into account your individual financial background. All right, and with that, let's take a quick recap at what we talked about last week. And if there's any questions at any point, just type into the question box on the right-hand panel. So last week we had the, or rather on Monday over the weekend, we saw the results of Japan's election on Sunday. So Shinzo Abe was calling for these snap elections to get a public vote of confidence for his economic policies, which involves depreciating the yen. So we saw a lot of signs that Abe was going to win. He did win, and all that saw eventually ahead of that announcement a bit of correction. We're still seeing it kind of stuttering a bit. We were looking at about 121.8 last week. Right now it's hovering around 118. But long term, the fundamentals are for dollar yen to push up higher. And this week is going to be a lot of dollar yen factors that will possibly drive it higher as well. So we'll be going through that later. So one of the possible reasons for that correction was the poor vote attendance, so that some people are taking it away as not a lot of people are backing this mandate, even though he won the same number of seats as before. And we also talked about commodities. Some China data wasn't very fantastic, so commodities still drifting lower, and we'll be watching out for the housing price index later on Thursday. U.S. oil inventories didn't help oil prices much as well. That was a bit of a surprise. And with a stronger dollar, which we've been seeing in the previous week, there was some pressure on gold. So will we be seeing the same story this time? And that cheap oil prices that we've been seeing over the past few months has been taking away some of the inflationary pressures. So no inflation, no one wants to hedge against inflation. So that's bad news for gold prices. So that's likely to be the story again this week. This week, oil's drifting under $60. That's quite a bit of milestone, I guess. A lot of people were talking about $60 as a potential floor. So that's unlikely to stay based on what the market is talking about. They're looking at another floor of $40 right now. So it looks like we could be headed there based on the supply and demand fundamentals. No changes in what we are seeing, still a supply glut and no turnaround in the demand for oil. So things are still going to drift lower. And with all these energy prices, energy stock prices drifting and dropping down, we are probably going to see the wider indices across the region or globally being held back a bit. So any gains will likely be capped by losses in the energy sector. And also starting to see some concerns over the global economy. So that's also hitting the financial sector. So banks starting to see some bit of a sell-off. So that's going to be what we'll be watching out for. Economic indicators this week to see if we can get some good news to help push things around. FOMC will be the event of the week. Everyone's going to be watching out for what language they'll be using. They've been talking about considerable time. They'll be keeping interest rates low for a considerable time. So will they change the language to something that might suggest this interest rate hike next year might be sooner than expected? And this is also the last FOMC meeting for the year, so a lot of people will be paying attention to any change in language before we go into the next year. So what might raise expectations of an interest rate hike has been all the relatively positive US data, especially on the jobs front. That's been very stable. Not enough to say it's been 100% recovery, but a lot of promising signs. Wage growth is still one of the indicators that hasn't really swung around yet, but initial jobless claims, unemployment rate has been pretty steady. So that might be giving more members of the Federal Reserve confidence to vote for an earlier rate hike. So that mix of votes between hawkish and dovish will also be something to look out for. And this week, I'll be looking quite closely at what's happening on the macro data front in China. One of the biggest indicators I like to look at is the housing price index. That's the 18th of every month usually, and that will be this Thursday. So it's been in negative territory for 2 straight months. If you rewind back to January, it started at a positive 9.6%. So this is something that needs to turn around before we get more confidence in China's economy. And the property sector accounts for about 30% of China's economy. There's a spillover into furniture, services, real estate agencies. So a lot of knock-on effects on this property sector. And that will have an impact on industrial metal prices and metal stocks as well. Another thing to look out for in China is we're seeing a lot of liquidity issues. Last week, the regulator approves about 12 IPOs. So Spring Airlines is a budget airline, and the brokerage Guosen Securities is among those 12. So with more IPOs coming on board in the horizon, usually that means investors want to take out some cash from the existing stocks to buy these IPOs. So there's always this IPO gamble. They're hoping for IPOs to shoot up on day one. So a lot of transfer in money. So usually you see some of the stocks selling off before the IPOs come online. So that's usually the case towards the end of the year. And that's what we're seeing this week, or at least yesterday. It's quite a bit of a sell-off on Chinese stocks. And iron ore has been also in bearish territory. The Australian Treasury was giving some commentary on it. It accounts for about 20% of its export income. So its budget has been compromised to some extent. So it's got to make some cuts on civil service spending. So it gave a bit of a forecast. It's expecting $60 in the foreseeable future. Right now, we're slightly under $70 per ton. So based on this, I guess, fundamentals, if you're going to see if the value of the things you're going to export is going to be lower, your currency is going to be affected as well. So we are expecting to see some pressure on the Aussie dollar crosses in the foreseeable future. So looking about maybe in the next year, more downside pressure for Aussie crosses. And one of the things that has been affected will be this stock, Fortescue Metals. Some of you may be familiar with it already. It's one of the best proxies on China's economy because it exports iron to China, and this is a huge huge percentage of its revenue portfolio. 90% of its revenue comes from China. So people like to trade it on China data news. So this is something that's been, I guess you can see this downtrend trapped in a downward channel with that drop in iron prices. So right now, you can't really see where the support is unless you draw out to a bigger time frame. 2009 was where it's pushing a new low. So 5-year lows in iron ore is almost the same as where we're looking at 5-year lows for Fortescue Metals, and that's a price of 217. Right now, Fortescue is trading around 2.45. So if you're looking for a potential floor, that's where we might see it go towards. Interestingly though, if you look at what the Bloomberg analysts polls are calling for, there's 10 calling for a buy, 12 recommending a hold, and 4 selling. So 12-month target price of 349. So a lot of analysts are optimistic on long-term fundamentals of Fortescue Metals. If you look back, 349 versus today's price of 245, that's almost a 50 to 70% upside. So some of the fundamentals they've been quite bullish about has been their management, good management, strong operational performance, and long life assets. And this, remember, is going to be a long-term outlook. So in the short term, we should still be seeing some downward pressure, and some estimates by JP Morgan is calling for a bottom for iron ore prices in Q4 of next year. So around September, that might be a potential window for entry if you are going long. But for now, this is really a trend is your friend thing. Looks like it's still going down. The other one that I've been looking at quite closely with that drop in oil prices has been PetroChina, one of the state-owned firms producing oil and natural gas in China. So also oil prices dropping since the middle of the year, seeing this corresponding downward channel for PetroChina, and it's also being capped by its 20-day moving average. So we were talking about this stock last week as well. If we look at what's been happening, we've got 50-day moving average crossing under 200. So there's a bit of a pressure from the death cross, and this point was where it was last week, where it ended. So it was trying to test the upward channel, upward resistance trend line. So looking at where we are today is bounce off that resistance and went back to that bounce off that support at around $8. So right now it's pretty much in the middle of both, in the middle of nowhere. So it's not a very good time to get into this right now. So you should be waiting for a more if you're more conservative, you will consider getting it on the resistance point where the channel is for another downward swing. And if you look at the target price, we talked about $10.09 last week. So analysts have been dropping or cutting their forecast. Now it's at $9.92. So still long term, 12 months is still positive based on consensus. one of the fundamentals that's quite supporting this is that strategy by PetroChina to move more into natural gas. So China also has some push into green energy, so that's going to be positive reforms that will benefit PetroChina. Okay, I've got a question about aluminum, copper, and steel. So very similar story with economic fundamentals not driving that demand for industrial metals. It's likely to see the same issue of pretty much no one wanting demand not supporting the and not supporting the price. So we're probably going to see the same story with what we're seeing in iron ore, and we need to see that turn around in at least China's economic numbers before some confidence goes back into industrial metals. So we'll be going a bit more into what are the events that will be possibly supporting the industrial metal prices. And another question on shale oil. How long will the good story of shale oil last? So there's been some projections about where oil prices might head towards in order for the U.S. oil shale producers to get out of business. That's what the OPEC's been doing. They didn't want to cut supply. They're hoping to price out all these U.S. Shale oil producers. Some people are saying $50 to $40 is going to be that price point where we should see some of these cut in supplies from the U.S. shale oil producers, because that's the supposed break-even price point. So when that happens, that might be the first indication of this shale oil story turning around. Shale oil will always be there. It's just going to be whether it's going to be economically feasible for them to continue extracting it. Hope that answers your question. The other trade that I've been looking at quite closely has been the volatility index. So I'm looking at this chart over the last 2 years. You can see right where we are now is around 20 points. So a huge jump in volatility over the last week. So you're looking at 78% jump. So if you got in at around 12, you have almost made double your money. So that's something to look at when you see volatility, I guess, pulling back later on. Might be a potential trade to look at. So what we saw earlier in this huge spike in October was this Ebola crisis and this start of concerns over Europe's growth. So that all happened in the same week and really caused some market jitters. That's where you get all these people buying puts and calls and hedging their portfolios. And now we're starting to see this happening again. People are starting to get worried about pretty much economic fundamentals. No real solid reasons for this spike, so I'm going to suspect this will pull back in a bit. So when it reaches that range that's been averaging around 12 to 14, that's when I think it might be an attractive entry to go into this. So there are two instruments available on the IG platform. One is the volatility index futures, and the other one, there's the ProShares short-term futures ETF. Both of them shadow the actual VIX quite closely, but just a marginal difference in the actual numbers. And looking at events this week, yesterday's Tankan survey, the Japanese economic survey, was slightly a bit disappointing. So the big headline numbers to look at is the manufacturing index. It came in at 12 versus a reading of 13. So business sentiment among manufacturers a bit low. So that supports that push for a weaker yen to stimulate the economy. And we did see a bit of a bounce after this data come out on the dollar yen. Industrial production numbers from the US last night, we saw it better than expected, 1.3% versus the estimates of 0.8%. Equities opened a bit more positively, but overall energy stocks pulled it back down. So that was yesterday. Today we had RBA minutes. As expected, no surprises. They are still calling for a period of rate stability. So no huge drama there. Japan's flash PMI came in slightly above expectations, but 52.1 versus 52. No big reaction there as well. China's manufacturing PMI, the flash PMI, was a bit disappointing. It came in at a 7-month low at 49.5. For first time in 7 months, that's in negative or contraction territory. So that's going to be something that will put more pressure on the industrial metals, copper, steel, rebar, aluminum, all the things that goes into building homes or industries, industrial activities. So the other indicators to watch out for will be the Eurozone manufacturing and services PMIs later in the afternoon. And we'll also see some another survey for Germany's economy economy at around 6 p.m. So Germany is the one to watch out for. It's been stuttering a bit recently. So this will help. If the numbers come in positively, it will help revive some of that confidence in the markets for a bounce in at least the DAX and the European stocks. Tomorrow will be something a bit busier. We get Japan's trade balance numbers in the morning. We're expecting a wider deficit, so that should put more pressure on the yen to weaken. So dollar yen trade potentially going to drift up higher over the next until tomorrow ahead of this news. And another one to look out for will be the Eurozone CPI numbers. It's going to be, we're expecting it to come in flat at 0.7%. The target inflation number is 2%, so still quite far away to go. So long-term euro dollar weakness. Another thing to look at if you're following oil prices is the crude inventories out at 11:30 p.m. We're expecting a jump in production to 5.9 million barrels. So if that supply comes in as expected, that'll mean more pressure on oil prices. So let's see if there are any surprises from this indicator. And the key event this week is Thursday morning, Wednesday night, FOMC's meeting. They've been talking about considerable time for quite a long time actually. So will they have any changing language for more hawkish tone? There will also be a press conference that's following this event. So that will be a key market lead for a lot of investors and pretty much for the rest of the region. If you're following the Kiwi dollar, we're expecting some weakness in New Zealand dollar. GDP numbers going to be softer than expected, 3.3% from the previous reading of 3.9%. So that could be a good play for Kiwi dollar crosses. And the one that I'm looking at closely is China's property price index around 9:30 on Thursday. October, September in negative territory. If you pull it out into a one-year perspective, it was at a positive 10% in January. So it's really dropped off quite a lot. So we are hoping to see at least some stabilizing, flat negative, or maybe improvement of negative, and that might give some hope that the Chinese economy is on its way back. So pressure probably on copper and mining stocks if property numbers don't do that well. And the one final thing to wrap up the week will be more Japan commentary with this monetary policy statement. On Friday, tentatively, the time is at 8:30. So this is possibly another dollar-yen mover. And this will be the first time the central bank will be giving its statement after the snap elections. So maybe more affirmation of Abenomics and weakening of the yen. So let's take a quick look at the rest of the action. This is what we're looking at. Most of the action happening at the end of the week. A lot of data to look at actually, but I just highlighted some of the indicators in red. Okay, request for. Okay, before we have any, do you have any further questions before I recap some of the earlier points? So request to look at slide 19. Let's take a look. Slide 19. Sorry, Xu Lian Yen, which was slide 19 for you? 1819. VIX, was it? Okay, this is the volatility index. You can see spike previously, then tapers down, and then spikes up. So the question is whether it's going to taper down. Most likely yes. No real reason for panic yet, at least. No real data to support this. So attractive window is when it comes back to that floor they've been watching around 12 to 14 points. But this is a huge base effect, so when it's 14 points and drops to 12, you have to be mindful it's quite a huge percentage drop, even though it's only about 2 points. But the upside is, you weigh the pros and cons, upside is larger than the downside. Okay, if I have no further questions, I'm going to pass on to Nabil. We'll take a look at some of the indices, currencies, and maybe if it's got some time, some stocks as well. Right, thanks everyone.
Hi, good Tuesday morning to everyone. My name is Nabil Mata, Premium Client Manager from IG. Thank you so much again for attending the live session of the Market Talk. Moving forward to 2015, we are looking to do a lot of new things in terms of webinars, introducing a bit more sessions, perhaps an evening session as well. So watch this space. Okay, so looking forward for the week, quite a I call it a week of consolidation, especially for a lot of the trends in the dollar and the yen pairs. First things first, let me just go through the disclaimer. All right, just a quick one. Basically, whatever's presented today is purely for education, and there's nothing to come specific investment objectives, financial situation, or particular needs of any particular person. Okay, so moving along. Okay, just a quick sound check. You guys can hear me, right? Hi, Lenny. Good to see you again. You managed to take your profit on the China A50 last week? Okay, so yes, but half only. Yeah, I think China A50, we had a quick discussion on China A50 since a few of you were looking at it. Really crazy bullish trend, and I think there was a correction that came a day after the webinar. I'll show you the charts later. But I mean, whenever you see big trends like that, especially like the yen pairs, just be a bit mindful. It's good to scale out profits here and there, because when it corrects and corrects really fast, because there's a lot of profit taking, or they call it short covering, or basically a lot of profit taking, and which caused the correction to be exaggerated. Yep. So let me just start with the indices again. Let's go to the S&P 500. Okay, so what we have here is the weekly chart. Yeah, as you can see, the weekly chart is very much still on the uptrend. Let me just adjust this trend line a little bit. Okay, so you can see that the uptrend channel has been respected all the way since the middle of 2013, and we're just chugging along, making higher high, higher lows. As I mentioned a couple of times in previous webinars, during the October period, there was a bit of a slight correction before it bounced up again. And right now, it seems that we're testing this support level area. Okay, this is quite a key level to look out for the S&P 500. I would say around the anywhere between 1980, okay, to 2000 level. Okay, around this level here. Okay, the reason why this is key is because there's a confluence of support. All right, you got the channel support, and you got a bit of a visual support. You see the previous resistance, then support. So this whole area here is quite key for me, because if it breaks, it is quite clear that traders might want to take it down back to another support level, maybe all the way back down to the 1900 level again. Okay, so this support is key to me. But having said that, on a trend perspective, the weekly chart is still on a uptrend. All right, slightly different case when we move down to a lower time frame, like a daily chart. Now I know there's a lot of lines here. Okay, simply this circles and lines is what I drew last week or the previous webinars. You can see this circle here was identifying this support level, and right now this is where we are. So daily chart is a different story. Daily chart, it is on a downtrend. Okay, the reason why it's on a downtrend, because it has broke a key low. Now, for those of you who do not know how to identify swings or price action, feel free to shout out, because learning from the live markets is the best way, is the best form of education rather than just theory. Okay, so whatever I do, whenever I analyze the markets, I always go to the longer, higher term time frames like weekly and daily, to try to establish or try to see what market phase it is in, whether is it consolidation, uptrend or downtrend. Only when I have a bias, then I'll start planning the trade. Okay, so for the S&P, weekly is in the uptrend, daily is in the downtrend. So it's a bit of a conflict, and whenever weekly and daily is telling two different things, just be a bit careful. There might be a fight coming up between the bulls and the bears, and as retail traders, we want to take our trades to the best possible levels, all right, to give yourself the highest probability of a winning trade. So daily charts are downtrend. Why? Simply because this little trend line was broken, okay, or this low here was broken. Alright, so when this low was broken, it's the start of a downtrend, lower low. Not much of a lower high, it just simply just dropped. Okay, but the thing is this, daily downtrend, weekly uptrend, but right now we are approaching a key level of support. Right, so what you want to do, let's say if you are bullish on the weekly chart because of that channel and the support that I'm talking about, you want the daily chart to consolidate a bit around this level here. You see this circle I drew here, around the 1980 level? This circle is, I probably drew it last week, a couple of weeks back, previous webinars, and this is a level you want to look out for in terms of strong support. Okay, this is where the channel support is and the visual support is. If you see the daily candles, let me just bring up my pen tool. If you see a daily candles marking around here or consolidating, there's every chance that we must start heading up from here. Okay, so have a look at this 1980 support level to see what might happen. Alright, so that's for the S&P 500. Okay, let me go back to my normal tool. Okay, because if you look at the weekly chart again, now if you look at the weekly chart again, if this support is respected, alright, there are two scenarios that might pan out. The trend will either continue and the channel supported, or it might break support and starts coming down and consolidate a bit. Now I know a lot of traders out there. I speak to many clients, especially counter trend traders or contrarian traders. What they like to do is that they like to go against the flow of the market. They like to go against the trends. Now I explored this topic many times. There's nothing wrong counter trend trading. It's just that you need to be very sharp. Okay, and when the trend is very intact, do not expect let's say if you see a red candle like that, don't expect the market to just drop down like that. Okay, unless there's something fundamentally that changed, like America declare war in China or something monumental like that, then maybe you'll see something like this, or like the credit crisis, But if not, if the market is very trending, all right, expect a bit of consolidation before the market might come down or correct. Okay, so don't just try to short here, put a stop loss above here and expect, dropping it all the way to 1,004, 1,005 level. Okay, it might consolidate. So even if you break the key support around 1980, expect some form of consolidation. That's where you want to bring out support and resistance, your chart patterns, and see what might happen next. Okay, so that's the S&P 500. Let me move on to the other indices. Let's see the Hang Seng. All right, so looking at the Hang Seng, now this little symmetrical triangle that I drew 2 or 3 webinars ago, it is still respected. It is still valid. Okay, if you look at the weekly candle 1, 2, 3, I think I drew this triangle somewhere up here during the mid-November period. And right now, what has just happened is that it's just trading in between this symmetrical triangle. For those of you who like to trade range-bound type of markets, this probably might be the market for you. It's just touching resistance, coming down, touching support, coming up. So right now we're testing a key support of the triangle, which is around the 22,700 level. Okay, let me just circle this area here. Okay, this whole area here is something you might want to look out for where we are right now, because quite similar to the S&P, because this is a key support. If it breaks down from this support level, we might go down to lower support around 22,000. Alright, if not, if it comes back up, it might just be still stuck in between the symmetrical triangle. But we are reaching the apex of it, meaning that the range is getting narrower and something's got to give. Alright, so let's pay attention in this coming 1 or 2 weeks to see what might happen. Looking at the daily chart, same thing, same story. Nothing much to infer. No key trend. Yes, it broke a key low, but for me, just use the weekly triangle as a guide of what might happen. Yep. So that's Hang Seng for you. Taking a look at the DAX. Okay, going to the DAX weekly chart. Pretty much the same story for all the indices, isn't it? I mean, we have been on a very bullish uptrend for the past 1-2 months, and then last week and coming to this week, a lot of the indices are just correcting quite a bit. Yeah, it does not mean that they will just fall through the roof. Okay, I repeat, it does not mean they just fall through the roof. It's just a lot of profit taking and a little correction. So just the big question you need to ask yourself when you're trading such markets is which time frame you're trading off. Because whenever the market does a correction, the daily and the weekly tend to, contradict one another. They tend to contradict one another. So be very clear whether you're targeting a longer term trade, medium term or short term trade. Right? So for the DAX, now, last week when I was presenting, I think we were near the 10,000 level. Okay, I drew this line here around the 9,008 because that's quite a strong support level. Now, obviously, we have broken through with a nice big bearish engulfing candle. Okay, let me just take away this channel because it's not really that valid. The key level you want to look out for on the DAX is around here. I would say give it about the 9300 level. 9300 level, right? Tricky thing is that I wouldn't call this a trend at all. There's no trend on the weekly chart. For me, it's just a big fat consolidation because if you look here, it made a lower low. See the circle here? So it made a lower low, which means that it might be a start of a downtrend or might start to consolidate. But after that, it fooled all of us and followed by, it made a higher high. So lower low followed by higher high. Very confusing, isn't it? So for such case, most of the time, this market tells me that it's most probably consolidating sideways. I can't really see a chart pattern establishing itself at the moment, but just pay attention to support and resistance level. Well, right now, on the weekly chart, we are at the support level though, around the 9,300 level. Looking at the daily chart, okay, slightly more bearish. But again, the 9,003 level is here. Just pay attention to the support level and see how the daily chart reacts to this level here. Okay, but looking at the weekly chart, I'm not too keen on the DAX simply because it has not much of direction. I mean, what it might do is that it might hit the support here, it might come back up here, it might come back down, followed by that. So it's just a bit of consolidation. I mean, I would love to look up for some kind of chart pattern or draw some kind of chart pattern so that we have a better guide. But at the moment, there's nothing much to infer. Okay, so for such markets, just be extra careful because there's no trends. It's just consolidating. But however, there's no particular chart pattern as yet. As compared to like the Hang Seng, very nice symmetrical triangle, and you have your parameters to trade with. Okay. Moving along. Let me see what's next. Okay, we have the, oh yeah, Jeannie, sorry, you have a question on the S&P. I'd like to know whether S&P is nearby any critical support. So I did not see your question, Jeannie, but I hope that, I think I spoke quite a bit on the support level where we are right now, isn't it? Near the 1980, 1990 level. Okay, so I hope that answers your question. Okay. So that's the DAX. Now, I'm going to move on to one more, which is the Japan 225. Okay, so Japan 225, looking at the weekly chart, what do you guys think? Is this bullish or bearish? Sorry, let me just close it. Yep. Do you guys think it's bullish or bearish at the moment for the Nikkei 225 chart? So I'm having a bit of problems with the question box. Can one of you just type something inside so that I can just have a look and see what's happening? Okay, just give me 1 minute. Yeah? Let me just try to sort it out. I'm so sorry about the technical error. Okay, so looking at the Nikkei, now right now on the weekly chart, it's still bullish, isn't it? It simply made a higher high, and right now it's finding a higher low. Okay, so the higher low can be anywhere at these support levels. Let me just draw this up for you. Okay, it can either be this support level, which is not the strongest support, around the 16,700, or it can be at the 16,300 level. This is a much stronger support because the previous resistance here. Okay, because of the previous resistance here. So the 1600 level, 16,300 to 16,700, these two areas might be potential support. Now, I was quite surprised that it breached through 17,000, to be honest. But it is what it is. For me, weekly is still on a uptrend. Okay? Alright, thank you so much, guys. Sorry, I was having problems with the question box. Now I see all your comments coming through. So, yeah, bullish, bullish. Oh, sorry, some of you said bearish. Sebastian, you said bearish. It is still bullish. Okay? It is still bullish. Simply because it just made a higher high. Right now it's finding a higher low. Okay, somewhere here. This potential area will be a higher low before it will continue uptrend. Okay. Now, however, on the daily chart, okay, I think last week I drew this triangle, it broke out and then came down again. On the daily chart, it's slightly different, isn't it? Because this whole support here has been broken. Let me just delete this. Okay, this whole support here, or this lows here, has been broken. So when a key low has been broken, the market will do either two things: consolidate or start with a downtrend. When a key high is broken, the market will do two things: consolidate or start uptrend. Okay, let me just get into a bit of theory now, if you guys don't mind. So basically, the market is making a series of higher highs and higher lows. Okay, what happens that if it breaks a new low, okay, let's say this was a previous low, it breaks a new low, it can either consolidate into some kind of chart pattern, or it can start making newer lows, lower low and lower high. Okay, so it can either consolidate into some form of chart pattern, or it will continue a reversal to the downside. Alright, so lower low is significant on a uptrend because it might indicate a consolidation or a reversal to the downside. Alright, now on the flip side, if the market is coming down and it breaks a new low here, it can either signal some form of consolidation here into any pattern. It can be a wedge, channel, whatever. Okay, or it will continue another lower low, lower high, lower low. Okay, so when you're looking at the downtrend, alright, so let me just put this here. Okay, let me repeat downtrend. Yeah, I'm supposed to talk about high high. So when looking at the when looking at the uptrend, if it breaks a key low, it's very important. Okay, the main thing you want to see is lower low. When you're looking at a downtrend, if it breaks a key high, that is something significant, higher high. Okay, sorry a bit for the confusion just now. Not enough coffee. But basically, yeah, when it's an uptrend, lower low is significant. When it's on a downtrend, a higher high is significant because it signals either consolidation or a change of trend. Okay, any questions on this? So this is very important. Okay, so this is how you study swings to understand what the market is trying to do. Okay, so on the daily chart right now, a key lower low has been made. Alright, so however, we are approaching a weekly support level. So same thing like your S&P, same thing as your DAX, daily and weekly, telling two different stories. And it is just, you got to be very mindful of levels. So daily chart is on a downtrend. Now what I want to look out for on the Japan 225 is basically on the weekly chart. I want to see some form of reaction around these two support levels here. Okay, because what might happen is we might hit the support, come back up here, and then from there consolidate. Whether it will make a new high, I'm not too sure since we're approaching the end of the year. I'm not too sure about that. But the thing is that if you long it at a good support level, even though if it does not want to make a new high, if it comes back to the previous resistance or previous highs around here, at least you're already in profit. Okay, so it's very important to know where you're buying and selling off and what kind of trade you're targeting. Very important. Yep. All right, so these are a few indices I wanted to cover for the day. Any other questions or indices before I move on? All right, this. Do you mind to share China A50? I knew that was coming. China A50. Okay, hi Miss Lee. Thank you for coming again. Okay, China A50. A lot of you are trading in China A50. Maybe because I missed the entire move. That's why I'm not happy about China A50. But it is a very interesting setup. It's just I call it crazy. I just call it crazy bullish. Yeah. Just load up my A50 here. Okay. Ginny, you missed it too. No worries. There's always opportunities in the market. Okay. For those of you who are new to trading, do not ever chase the market. There's always opportunities. There's so many instruments, so many forex pairs, so many indices, so many equities that you can trade on. All right. So there's always opportunity. So let's see. Now, China A50 weekly chart. I don't think I need to ask you guys whether it's bullish or bearish, isn't it? It's just crazy bullish at the moment. Okay. Now, one thing to infer, because I remember I zoomed out a bit last week to have a look at the resistance, and I've not enough chart data, but what I can infer from this weekly chart is there is resistance, not surprisingly, at the whole number of 10,000. And if you see last week's candle, it made a very nice high of about 10,005 only for traders to push it back down. All right, what I think is that there were a lot of sell orders around the 10,000 to 10,500 level to close out profits, which is why the market did this. Now, when you see a long shadow like that, it means that a lot of bears are waiting here. Either the bears are waiting here or there were a lot of close-out orders here, meaning that a lot of people are buying from these levels and they're just taking profit, setting profit targets around the 10,000 level. Okay, so 10,000 is respected. But weekly chart is one direction, bullish. Okay, so let's zoom into a lower time frame to try to look for a trade. Now, daily chart, still bullish. Now, this big red candle does not mean a change or trend. Yeah? There is no low that is broken. Now, what do I mean by change or trend? Remember just now when I mentioned what change or trend is? So, on the uptrend, okay, on an uptrend, a lower low is significant. Now, right now, do we have a lower low? No. Okay, this is the swing. Unless this level here is broken, around the 9.4 to 9.5 level, but right now, no. Right now, weekly is on the uptrend, daily is on the uptrend. And this level here is quite good support, around the 9.4, 9.5. Let me zoom into 4-hour chart to let you have a closer look. Okay, but daily is still quite bullish on uptrend. Alright, just be mindful of the key resistance level around the 10,000 level. Now looking at the 4-hour chart. Okay, now I drew this last week. You see this little channel that I drew? I think one of you, or was it Missy? Lenny, right? Lenny was buying, I'm not sure where she bought it from, but she was asking me where to take profit. I drew this channel and I mentioned that, I mean, if it touches the top of the channel here, you just got to be careful. And what happened was that it touched immediately, it just boom, went down. Alright, went down all the way to about 9.3, 9.2. So I really hope you managed to get out somewhere here. At least when the channel was broken, you were aware enough to just close it out for profit. Okay, but this channel was quite respected. Now, right now, where we are is that the market is in consolidation mode. Okay, the bulls are a bit tired, so the bears are coming in as well. However, it is in consolidation mode. I mean, if you look at the market here, all right, what you can do, you can draw a few lines somewhere here. Okay, so what's going to happen is this. It's just consolidating. You can call it a wedge. I don't really see any decent chart pattern except this trend line support here. followed by all this resistance around the 9,008 level. Okay, what you want to do is, if you're still bullish, you want to buy it at support levels. Now, where is support level? Anywhere around here. All these are support levels. Okay, so either it bounced back to this trend line here, it starts going up again, or it bounced back to the support level around the 9394 level. All this is a support level, potential support level. Now, what you do not want to do, okay, is to buy at resistance. Now, right now, where is resistance? Short-term resistance is around the 9,008. It's not rocket science. Yeah, if you see the number of touches, resistance here, support here, resistance here, resistance here, resistance here, and a potential resistance here. Okay, the next strong level of resistance is around the 10,000. Of course, if you can make a new high around the 10,002, that would be great, but just be mindful. If you buy near the resistance, where's your stop loss? Okay, your stop loss would be below this swing, either below this swing or below this swing. Now, if your stop loss is here and you want to set a profit target, normally profit target we are setting near resistance, right? So let's say if your profit target is at 10,000, does it make sense? The answer is no. Why? Because your risk to reward is negative for this case. So, if you want to have aggressive stop loss, be below this swing. If you want to be more conservative, will be all the way here. Now, either way, if your target is 10,000, your risk to reward is negative. All right. If you wanted to buy the market, you've entered around here or somewhere around here, below here. All these are support levels. Right now, where we are is just too close to resistance. Okay. Of course, if it breaks 10,000, that's a different story. Then maybe we are testing 10,004 again. But right now, we are at resistance. Okay. All good on China A50. So right now, we're just consolidating. If you're still bullish, look for support and try to take it up, at least back to the previous high. All right, whether it can make new highs, I'm not too sure. Just because it's the 16th of December, markets might be winding down a bit. Yep. Okay, so any other questions on China A50? Sorry, Mr. I don't have the Shanghai index over here, so maybe you can drop me an email, give me a call, I can look at the Bloomberg chart for you. Alright. Lenny, same thing, CSI 300, I don't have it here at the moment. Yeah, so just drop me an email or give me a call and I'll try to cover that with you. Okay. Alright, so moving on. Okay, just one thing before I move on, yeah. When you trade, right, it's very frustrating. If you look at the weekly and daily chart, it's just crazy bullish. Okay, and I speak to many clients and they tell me the same story. Weekly, daily chart, very bullish. See, this is a weekly, this is a daily. And they miss the whole bullish rally from November all the way to where we are right now. They totally miss the whole rally. Doesn't matter for whatever reason. But what happens is that when they enter a buy trade, when they finally try to enter a buy trade, maybe somewhere here. Okay, when they finally enter a buy trade somewhere here, the market falls. And it is very frustrating as a trader. Of all the times when the market is super bullish, you could enter buy, you didn't enter. The moment you enter buy, the thing goes against you. Okay, it is frustrating, isn't it? Same thing for dollar yen. I have clients who totally missed the rally from 110 all the way to 118, 119, 120. They totally missed the entire rally. And then recently they bought it last week, and yesterday and 2 days ago it started dropping and they are negative, and it's very, very frustrating. So the question is why? What's happening? I thought it's bullish. Why is it that when I enter the trend changes? Okay, now it's not a conspiracy theory. Yeah, the market does not work against you like that. The main thing is you need to plan your trade. Doesn't mean it's bullish, means you just close your eye and buy. Close your eyes and buy. Okay, or doesn't mean it's very bearish, means you just close your eyes and sell. Alright, it doesn't work like that. You need to plan your trade. You need to know where your support and resistance levels are, and don't be stubborn. If you're wrong, get out first. You can always enter the trade again. This is not an investment. We are traders, not investors. Okay, because you're using leverage, so be very, very careful. Of course, if you are risking very small amounts, then it's fine. Maybe you can keep it long term, no problems. But if you are risking a big amount, you need to put on a trader's cap, not an investor's cap. All right. Sorry for being long-winded. It's just something I like to highlight to you because I speak to clients every single day about their trading, and this is a common thing that I see. All right. So moving on. So let's go to Forex right now. Singapore blue chip, Gabriel. Okay, sorry. Sure, no problem. Singapore blue chip. Last I saw was consolidating. Wow, something has broken. All right, so let's have a quick look at the Singapore blue chip. Now, let's start the weekly chart again. Aha. Looks exactly like the Hang Seng. Now, you notice this symmetrical triangle and this circle I drew here. This is a circle I drew last, I think 2 weeks or last week's webinar. Go back to the recordings and have a look. Okay, the reason why I drew the circle is because I see that there's no direction on weekly chart. All right, it made a lower low followed by a V shape, and it made me infer that a consolidation might come up, which is why I drew this little symmetrical triangle. I remember that I mentioned that the support trend line is nice because there are many touches, but the resistance is still subjective because this is only a second touch. But it seems that this is what the market wants to do. It's just trapped in between this symmetrical triangle. Okay, so no surprises. It touched the 380 level and starts coming down. The first level of support is 365. If it breaks that, most probably it's going to the trendline support around the 360 level. There's really nothing much to infer when it comes to consolidation markets because it's just playing around support and resistance. Again, same thing like the Hang Seng. It's just going to apex of the triangle, so a breakout might happen soon in the next couple of weeks. All right, look at the daily chart. Now, daily chart definitely seems a bit more bearish. Okay, I mean, this is a very clear sign. We drew this trend line on the weekly chart, isn't it? But if you notice here, there's one touch here, two touch here. Look at these 3 candles here. 3 candles with long shadows to the upside, and this is what I call bearish pin candles. It's very, very obvious that there are a lot of traders trying to sell here. Okay, so these are classic signs that the resistance is very key around the 380 level. And what happened next is drop. Right now, it broke a new low at 370. Okay, if it comes back to test the 370 level, okay, there might be every chance that this previous support might turn resistance and it might start to fall downwards back to the support trend line. Okay, this is a potential trade plan. But please, 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 if you are trading intraday or swing trade on the Singapore blue chip, use the weekly chart to guide you because this triangle seems to be respected. Okay, if you ask me whether I would like to trade on such markets, my answer is no, because I only like to trade trending pairs when the weekly and daily is telling me the same thing. I do not like to trade consolidation and try to squeeze pips out of support and resistance. That's not my style. It might be your style, it's totally fine, but be very mindful at what's happening on the higher time frame. So keep this triangle in mind. All right. Okay, Sebastian, can you talk dollar yen? Okay, sure. Okay, so now I'm going to move on to Forex right now. Now looking at dollar yen. Okay, look at the weekly chart. Again, very obvious, isn't it? Bearish. Bullish, one direction. So I repeat, yeah, dollar yen, weekly, very bullish to the upside. All right, it just made a new high. Now, right now, we are finding a higher low. Okay, so the market has done something like this. Okay, so it made a higher high, and right now, we are trying to make a higher low. Now, the big question is this. A lot of traders ask me, Nabil, you said price action, higher high, uptrend, yes. Now, how do I know where's the higher low? Okay, because the higher low can be here, or it can come down another notch, it can be here, and then it starts going up to continue the uptrend. So the question as a trader is, if once you have a bias, let's say if you're bullish and you want to buy, you need to start planning on where's the possible higher low. There's no guarantees in the market, yeah. If it's so easy to spot higher lows and things like that, we all be millionaires. Okay, but if you understand how the market moves and find evidence to support your trade plan, all right, what you're doing is you're increasing the probability of your success as a trader. Okay, so right now we need to find higher lows because weekly is definitely an uptrend. Okay, if you're trading on a higher term time frame. Yep. Now let me move on to the daily chart. Okay, now looking at the daily chart, you can see that the whole rally from end of November has been reversed, and it's very clear. So sorry, let me take away this trade. This is not my trading, yeah. This is just a demo account that I used to do walkthroughs for clients. So just ignore that. Okay. So if you look at this daily chart, this is a very key support here around the 11750. Okay. You can see that previous in November there are a few touches here couldn't break. December 10 and right now here. So this is what I mean by finding clues on where the support might come in if you are bullish. So for this chart, weekly on uptrend, daily consolidating. Okay, there's not much. It's just consolidating. The swing low is here. Currently, it is still holding the 11750 level around there. Okay, if it breaks this low, then yes, it might be start a downtrend. But right now, this is a support, a strong support that might attract some bulls to come in. Okay, so daily is a bit more consolidating. Yep, having a closer look at the 4-hour chart. Okay, you can see that the 4-hour chart, let me just delete some of the lines here. Alright, so you can see that the 4-hour chart gives you a bit more insight into what kind of consolidation it's trying to do. Something like that. Okay, so basically it's trapped right now in a descending triangle. Okay, so the key thing is this. Now, when the market is consolidating, you want to draw up your support and resistance levels. We are approaching a key support level around the 112 to 11750 to 11760 area. Okay, now if the market does something like this, okay, if I'm bullish, okay, let's say I'm bullish. If the market starts mucking around here, consolidate, and it breaks back above 118, there's every chance that the market might continue to the upside and maybe test the previous highs on 120, 121. However, the market breaks a new low below 11750, and if I'm a bull, then I might want to step back and reaccess the markets. Okay, do not be stubborn. Okay, because if you are bullish, if it breaks a new low, don't ever think that, wow, this is a better price for me, I will still buy. No. Okay, if it breaks a new low, means that it might go to another level of support. Okay, so you can still be bullish, but plan for the trade. It might go to 117, 116, who knows? Okay, but right now, daily is consolidation, weekly is an uptrend. Ask yourself, what kind of trade are you planning? Are you planning intraday trade? Are you planning a weekly trade? And then from there, do the planning. Okay, so 11750 is something, this area here is something you want to keep an eye to see whether the bulls might come in, take it up again. Alright? Okay, so dollar yen done. Now I'm going to move on to euro dollar. Sebastian, any question? I think you need to go soon, right? So any last questions on dollar yen before you shoot off? Okay, great. So let me move on to the dollar pairs. Alright, thanks Sebastian. See you soon. Now, so most of the yen pairs are telling the same story. Now, the longer term charts are still bullish. Okay, you just need to plan. If you're still bullish, just need to look for support and plan your trade. Okay, so most of the yen pairs look the same. Same thing for dollar pairs. Now, if you look at euro dollar, the euro dollar weekly chart, still one direction. Okay, and we have discussed this particular chart for many weeks already. So the weekly chart is still one direction. Yep, and that is down, bearish. Very bearish. Nothing has changed much except there's an interesting development here on the weekly chart. Now, if you pay attention to the weekly chart on the euro dollar, look at this candle here. Okay, this one here, this green candle. Okay. Now, the reason why I want you to look at the candle is because on weekly chart, what I like to pay attention on is bullish and bearish engulfing candles. It might not mean a total reversal, but it might mean that for this case, the bears might be tired and you might want to retrace higher. Yeah. Now, the reason why bullish and bearish engulfing candles on a weekly chart is so powerful is because it's simply on a higher time frame. And if you see a bullish engulfing candle on a weekly chart, it tells you that for the whole week, the bulls are the majority, or the bulls are overtaking the bears. Okay, so engulfing candles are quite important. I mean, case in point, let me just bring your attention back a bit to the previous years. So if you look, let me just get rid of all these circles first. Okay, so if you look at this candle here, look at that. Oops, sorry. So if you look at this candle here, a bullish engulfing candle followed by a move up. All right. Let me give you an example. Another one here, a bullish engulfing candle followed by a move up. All right. So just one or two examples for you to see. Another one here, a bullish engulfing candle followed by a move up. All right. You can see the same thing for the bears. Like this one here, bearish engulfing candle followed by a move down. Yeah, retrace a bit, but the overall direction is still down. This one as well, bearish engulfing candle followed by a move down. This one as well, bearish engulfing candle followed by a move down. How about here? Bearish engulfing candle followed by a move down. This one as well, bearish engulfing candle followed by a move down. And this one as well, the most recent one, bearish engulfing candle followed by a move down. Okay? Now for those of you who do not know what's a bearish bullish engulfing candle, I encourage you to just Google that, and there's a lot of good websites to explain that. But basically, these candle patterns on high term time frames are very powerful. I mean, do not use one candlestick patterns to enter a trade, but I'm just saying it just provides you with evidence, you know, or it provides you with ammunition for you to plan your trade. So especially if you see like a bullish engulfing candle at support or a bearish engulfing candle at resistance, it tells a story. All right, so just pay attention to that. Something additional that I'd just like to share with you. So this is a weekly chart. Now this is where we are right now. We form a bullish engulfing candle. So it just gives me a heads up that the bears might be a bit tired for now. All right, the trend is still down though. The trend is still down. Don't forget that. Yep. So let's go to the daily chart. Okay, look at the daily chart. Now this is the trend line that I drew last week. Let me just delete some of the lines. Yeah. Now you notice that the trend line I drew last week, whenever it hit, it came down, hit, it came down. Now right now it broke above that. But having said that, 1.25 is a key level to me. Okay, 1.25 is a very key level to me because I want to see whether we can break above 1.25. Right now, daily chart is in consolidation. Yeah, weekly downtrend, daily consolidation. One chart pattern that you might be able to infer from daily chart is a bit of a inverse head and shoulder. So I'm not surprised you might come down to test the 1.2370 level again around this area to form a complete inverse head and shoulders. And if it breaks above the 1.25, this to me is the inverse head and shoulders neckline, and it might signal a reversal back to the higher prices. Alright, so euro dollar is in consolidation. Yep. Now just take note that again the weekly chart is still very bearish. So if it breaks 1.25 and you want to take a trade up, alright, just be mindful of every level of resistance. 1.26 is another level of key resistance you want to look out for. Okay, because if it's still respected, then it might start coming down again. Now just take note, if you study chart patterns, yeah, head and shoulders have not a very good hit rate in terms of success. It's quite a low success rate. Okay, so just be mindful. But having said that, it is what it is. Currently, it's an inverse head and shoulders. Just be mindful 1.25 to 1.26. Now, some of you might ask me, Nabil, is this a reversal to the upside? Again, depends on which time frame you're trading on. Because if you ask me as a weekly trader, even if it breaks 1.25 or it breaks 1.26, it's still a retracement. The trend is still down. But if you are intraday trader, let's say you look at the 4-hour chart, if it breaks 1.25, then you can say that this might be a start of a uptrend, maybe to 1.26. You see the difference? So you can be bullish, I can be bearish, both of us can make money. It depends on which time frame you're taking the trade on. Very important. Okay, I repeat this gazillion times. Alright, so that's Euro dollar for you. I'm going to move on right now to the Aussie dollar. Okay, so Aussie dollar on a weekly chart, same thing as the Euro, still very bearish. And if you zoom out of the weekly chart, right, there's really not much of support around where we are right now. I mean, the only logical support that I can see is probably around the, let's see, here, around the 81.50. Okay, and close to the 80 cents already. Alright, so 81.50 is somewhere I can see. Right now where we are, there's really no support, and it's still very, very bearish. So I'm not surprised if it goes down all the way to 81.50. Alright, this is logical support. Daily chart, look at that. So these are the kind of charts that I like, whereby the weekly and daily is telling the same story. So weekly down, daily down. Just looking for resistance. Okay, because I'm trading according to the trend. Alright? So if you notice that, look at the daily chart, it broke a key low, pulled back. If you short a resistance, comes down again, pull back, comes down again. Alright, this is a very typical trending markets that I like to trade on. Alright, because daily and weekly is on the same wavelength. Now if you look at the 4-hour chart, sorry. Now 4-hour chart, there's a bit of it's still a downtrend. I mean, there's a bit of bottom form here, but it's still a downtrend. Let me extend this trend line that I drew last week. Okay, so key level to look out for around the 8250 level. Alright, because this trend line has been respected all the way since November 21st. 1 touch, 2 touch, 3 touch, 4 touch, 5 touch, 6 touch, 7 touch. So just be mindful of all this resistance level, 8250. Okay, if 8250 is broken, then it might go back to near the 8330 level. Okay, but it's still daily and the weekly is still a downtrend, so the momentum is still towards the downside. If you think that this is a short-term bottom and you want to counter trend to buy it up, just be mindful that the momentum is still down, unless something fundamentally changes. But right now, trend is still down. Okay, so that's Aussie dollar for you. Alright, any other questions on Forex before I move on to some gold and silver? Alright, all good. So I'm going to move on to commodities right now. USD ruble. Oh, wow. I'm not seeing that pair. No. I know there's a lot of talk on it because of the sanctions that US put on Russia, isn't it? Let me see whether I even have that on here. Give me a moment, yeah. There we go. Yeah, I like the kind of trades that you're picking, Lenny. Very nice trending pairs. It's good. It's good. I mean, these are all fundamentally driven markets, so you still need to plan in terms of technical levels. Okay. Let me see whether I can even analyze this chart. Weekly chart, there's nothing to analyze except that it's very bullish. I don't have enough information. Let me have a look at the daily chart. 6565. Again, weekly, daily is also just bullish. Not much. I'm sorry that I don't have enough data on this chart. I need to look at the Bloomberg charts to have a bit more deeper analysis. But right now, it's just very bullish. Now, how I like to take such markets, right? This looks a bit like China 850, isn't it? If you want to take short-term trades, you can always take short-term pullback. So daily is bullish, weekly is bullish, 4 hours bullish. You can always zoom in to 15 minutes, okay? As you can see that 66 level, okay, I'm just basing on 15 minutes because I don't have past data to draw any lines of resistance. But 66 seems to be respected. what you want to do is, let's see what happens here. Hopefully it forms some form of clear chart patterns like the China 850. Because China 850 forms some form of a triangle consolidation, isn't it? But for this case, there's not much of a pattern to infer. If the bulls are tired, it might consolidate, all right? And if it forms some kind of bullish flag or bullish wedge, then maybe, yes, you can take it up again back to the previous high, at least to the 66 level. If it breaks above, even better still. Okay, but such very bullish trends, especially when it's fundamentally driven, go to lower time frames and try to take trades from there if that's your cup of tea. Alright, if you are a more long-term trader, then by all means you can wait for a bigger pullback. But if you want to catch the short-term trends in a very fundamentally driven market, go to the lower time frames. Same thing for how dollar yen moved, I think 1-2 months ago. Same thing on how China 850 has moved, and now Russia, USD ruble. Okay. All right. So sorry, I don't have much information. I just got to look at the 15-minute chart to try to plan something. Okay. So let me move on to commodities right now. Now gold and silver. Okay. Now gold and silver, as you guys know, if you listen to webinars consistently, I have been bearish on gold and silver for some time. All the way, gold, when it broke the 1180 level, okay, I was really quite keen on the downside, simply because if you look at the higher time frame, right, you can see that this level here has been respected all the way from 2009, 2010, 2013, and 2014. So when it broke below this key level, I was definitely bearish. Okay, because I like it when long-term charts breaks a key resistance and support, because the trend might continue for a sustainable period of time. And I'm always finding such trades because you can simply hold the trade, just use a trailing stop and just follow the trend. Very nice, easy trades. But what happened is this. I mean, this is where flexibility as a trader comes in, because if you're wrong, you need to know when to get out and maybe take a step to the side and just reassess your plan. So what happens is that it broke a low, it formed a bullish pin candle, and it bounced back up. Okay, I drew this trend line here, hoping that this trend line might be respected. So it did come down again after it hit this trend line around the 1200, form a bearish engulfing candle. However, there seems to be a floor or a strong support around the 1140 level that many on the weekly chart, right, 1, 2, 4 weekly candles couldn't break the 1140 level. And what happened right now is that it made a push up and it broke above my key resistance trend line of 1180. Okay, now I'm taking a side step to gold right now. I have no bias, simply of what the weekly chart has done. But I'm just keen to see what happens here, because what it has done is it has broke a key resistance level. Now it's testing another resistance level around the 1240, 1250 level. But I want to see whether what kind of consolidation it forms, or whether it will continue to upside or downside. Okay, because to me the key levels are this. If it breaks back below 1180, chances are that the bears might come in and a downtrend might start. If it breaks above the 1240, 1250 level, chances are the bulls might come in and a new uptrend might start. So right now we're just in consolidation territory. Pay attention at two levels, 1180 and around the 1250 level, to see what trend might form. Okay, so that's for gold. I don't have a fixed bias at the moment because the weekly chart is mixed. The daily chart is a bit mixed as well. Alright, it's a bit mixed as well. So I'm taking a side step. Yeah. Now looking at the let me see. Looking at the silver chart. Now silver is slightly different story from gold, simply because on the weekly chart it has a clearer break of a key resistance support level. So if you look at the weekly chart, right, again, zoom out for you. If you notice the 1850 level, which is the circle I drew a couple of webinars back here, 1850 resistance, a few fake breakouts here, support, and we've broken it in September 15, and it just continued downside. So you see the nature of the trend as compared to gold. Gold broke the key support and bounced back up. Silver broke the key support and it convincingly moved lower all the way to 1.4, from 1850 to 1400. Okay, so right now silver definitely seems a bit more bearish than gold. Just again, the few weekly candles, the last 2 week candles has been a bit mixed. Okay, so looking at the daily chart, for me, weekly is still in a downtrend. Yeah, weekly is still in a downtrend. On the daily chart, okay, I drew this trend line. Alright, and this key resistance around the 1680 level was broken, but right now it's a complete U-turn. So there's not much direction. So when it comes to such markets, right, you need to be able to tell yourself there's no direction. I'm willing to step aside and see what happens. Okay, do not try to move the market. We are retail traders, unless you're trillions of dollars. It's better to step aside, let the trend establish itself, and just follow it. Okay, so silver, I'm a bit more bearish. I'm just waiting to see the best. I'm just waiting for more bears to come in before I join the party. Okay, key level I'm looking at for silver, 1600. 1600 level is broken. Hopefully, it will test the previous low around the 1500. If the 1500 is broken, then yes, the weekly and daily chart will be finally telling the same story, both on the downtrend, and I will be very happy to join the party to the downside. Okay, so silver is slightly more bearish than gold. Gold I'm a bit more neutral. Alright. Lenny, you said that you did not have time to see trade sensibly and smartly, Julian. Yeah, exactly. It's all about trade planning. Okay, I'm very, very big on trade planning. Very, very important. Okay, Lenny, you said that you can't see the price. Okay, I think the 15-minute chart. Again, there's nothing much info for USD against the Russian ruble. It's just consolidating. Even right now, even the consolidation is not good enough because it's just too near the resistance. Unless you're taking a scalping trade of a couple of minute chart, 1-2 minute chart, is a different story. But if you're looking for intraday trade, I want to wait for at least some kind of consolidation, a nicer consolidation here, established chart pattern, whether it's a channel or flag, to be able to try to take it to the previous highs again. Okay, that's around the 60, might come down to 65, but right now we're just testing 66 level. Again, I apologize, I don't have the right proper charts with view to have a more thorough analysis for this particular pair. Okay, 60.55. Where's 60.55? Oh, you're talking that you hoping that it comes down to 60.55. Ah, yeah, it's still quite some way off actually. 60.55 is somewhere here, no? Yes, it is previous resistance might turn to support, but it's still some way off. It's still somewhere off. I'm looking to see more around 65 to see what happens there. Okay, but basically just hang on there. Okay, so any other? All right, so that's gold and silver. All right, so any other your view on oil before the year end? Oh, Lenny, you say something wrong in my chart, is it? Okay, I'm sorry. I'll go back to have a look. Maybe you're looking at from another source, but let me have a look. Okay, I'll drop you an email on the chart. Okay, so Julia has a question in terms of any view on oil before the year end. Now, I know that in the beginning of next year, or maybe some of you might have attended a few already, there are a lot of market outlook talks by brokers, banks, etc., etc. As a pure technical trader, right, I'm not a big fan of market outlooks, especially when we're talking about yearly outlooks. For me, it's just way too long term. And I'm trying to condition my mind to trade what's in front of me. I want to keep things as simple as possible because many times, I'm not sure whether you notice this, especially if you're using technical analysis or if you want to be a technical trader. Many times your mind gets in the way with your technical analysis. You think that, I mean, so like for example, take this chart for example, US crude, this is light crude, okay, WTI. Many times let's say it drops to 850 level, okay, and you say that you see the trend is bearish, but in your mind you always think that this one's a bit too low already. Maybe the market will shoot back up again. Okay, but what's in front of you is that the trend is bearish. So if you're just following purely on the charts, if it's down, you just trade it down. If it's consolidating, you trade it among the support and resistance. If it's up, you trade it up. Okay, but when there's a conflict between what you think, I mean, I think I presented this seminar a couple of times at some events. Is basically what you think and what you see. There's always a conflict with that. And what I'm trying to do to improve myself as a trader, to improve consistency, is I only want to trade what I see rather than what I think. Okay, I know it might sound totally bizarre or totally crazy to you, but if you want to be a pure technician, you need to follow that. As a trader, you need to trade what you see. Alright, don't try to guess, oh, what my Draghi say, oh, FOMC is on Thursday, what my Yellen say. Alright, it's okay to try to form some predictions your own on what might happen, but at the end of the day, the charts will do, or the markets will do what it wants to do. Okay, so as a retail trader, it's more important to follow the charts, to trade what you see rather than what you think. So, if you look at oil, I know there are a lot of talks about the year end, hitting $40 or things like that, but I'm really not too concerned. I'm just following the charts. In fact, for WTI, I'm just be loading out the short positions until the chart tells otherwise. So if you look at the weekly chart, it's just very bearish, isn't it? Just crazy bearish. Daily chart, okay, a bit of consolidation in November, but you notice that, look at that, lower low, lower high, lower low, lower high. What it does is that it forms a very nice consolidation here, some form of channel. And look at that, this is a really, really beautiful setup. All right, for those of you who really want to be very, very good at technical analysis, this is a textbook example of how the market goes in a downtrend, consolidate a bit, breaks the support, pulls back to test the previous support at resistance, which also happens to be the 8,000 whole number area, and it starts coming down. If any of you would have taken this trade here to the downside, to me, this is a 5-star trade. This is a really, really beautiful setup. You will not get any better than this. Okay, so if you're a technical trader, this is really nice. Break a support, test previous support, term resistance, comes down again. Beautiful. Your stop loss can be above the previous swing high. And this is the kind of setup that you want to look out for. Okay, so unless I see some form of consolidation, or maybe a new high established on daily chart, then I say, okay, maybe the bears are exhausted. It might pull back to a higher level of retracement. But right now, we have not formed any consolidation. It's just going down, down, down. And as a technical trader, I'm just taking down. It might go down 7,000, possible even. Okay, so until I see some form of consolidation, then maybe I might want to infer that it might be some kind of bottom. But right now, still very bearish. Okay, I'm using the WTI, for example, same story for Brent. Okay. So risk and management, the balance, don't overtrade, so their views as a guide. Yes, you then, exactly. At the end of the day, it's your money, it's your trades. Analysts have their own views, but always use it as a guide. Always use it as a guide. And very important thing is that whenever any analyst gives a prediction, ask them what time frame they're looking at, what time horizon. Because like the example I gave you previously, I can be bullish, you can be bearish, both of us can still make money at the same time. Yep, so very, very important to plan the trade. And if you want to be a pure technician just like me, I suggest you condition your mind to trade what you see instead of what you think. Okay, don't try to guess what might happen. Just follow the charts. Much, much easier that way. Okay, it's easier said than done because a lot of things involve psychology. And that's why trading psychology is a big part of trading. Right? I know some of you are pure fundamentalists might say this Nabil is talking rubbish and just don't know what he's talking about. But I mean, I've had the privilege of working with many hundreds of clients because of my job. I speak to many clients, and this is and I speak to many successful traders as well. And basically, I'm just sharing. Okay, so okay, if there's nothing else, again, I exceed the time. Nothing new there. So again, this session will be recorded now. Important thing to note: 2015, there'll be a new schedule. I'll be moving this session to the evening. Okay. Just for based on feedback, I think a lot of the working crowd prefer the evening session. The days that will be announced most probably starts at 7 p.m. or so. So hopefully you guys will still be able to attend it. Check your email, check your inbox. We'll be sending invitations, and check the website regularly, the live webinar website, to see updates on what time and what kind of webinars we are having. So we have a lot of new webinars coming out next year. Okay, dinner time. Yes, closer dinner time. That's where the markets gets more interesting, isn't it? Yep. Hopefully we'll cover markets during news announcements like NFP and things like that. So we'll see. We'll see what happens. But we're just trying to help you be a better trader. All right. If not, thank you so much for attending this session of Market Talk. It's been a pleasure presenting to you again. Have a good weekend. If you're going overseas, safe travels, and we'll catch up soon next week. Thank you. Have a good day.